Now, Bitcoin, listen, it really didn't do a whole lot. Again, it tried to push up and it got pushed down. One of the things to just keep in mind, if this keeps happening, the bears are going to take over. So it keeps on, the bulls keep on trying to push it up, and the bears by the end of the day have won the day. That's okay as long as the bulls win it on the third time. So tomorrow is very pivotal, in my opinion, for Bitcoin. If it can't move up tomorrow, then I would be worried about a move down here and potentially a move to 49,000. Okay, if it can, then I still think there's a lot of resistance at 60 to 61,000 on the chart.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Let's join Gareth in this video about Bitcoin and more.
NVIDIA down 5.5% today. That's a pretty big move, especially considering it's a almost $5 trillion company. But what did I show you guys yesterday in Trading the Close? I showed you how the chart replication. So basically, if you go back to this period, this was the last period right here where NVIDIA topped, had a 21% correction from this high right down here. And I was showing you guys yesterday how the pattern replication was almost identical to what we were doing here. And I'll zoom in because I know there's some newer people that are just tuning in today, and I always want people to feel like they fully understand Trading the Close and what's going on here. So I'm zooming in here, needless to say, so we can really see this was the beginning point. We had a reversal candle, confirmation of it, which is that secondary down move. We then got the bounce, a pullback, made a higher low. So you have the higher low, and then we went up. We didn't take out this high, but we retraced a bunch of it. And then look at the drop that we saw after that. Okay, so remember that. Remember that pattern formation. Let's zoom to the current period here. Let's bring us all the way over here. Here's your current chart. What do we have here? All right, here's your reversal candle right here. Here's your confirming move right there. You have your bounce, your retrace, higher low, your rally up, almost getting back to those highs, and then boom. And so the idea here is that patterns generally repeat time after time because, again, as I said yesterday, humans are trading this, and humans tend to repeat, right? We're ruled by emotion, greed, fear, and everything in between, and we tend to trade emotionally. Everyone's emotional. Listen, you could try to tame it. I do my best to tame it. It helps me trade better, but still, it's still very, very hard to tame emotion. The idea is if people are trading, they tend to repeat. That's why technical analysis works, why patterns repeat. Why does a bear flag tend to work, right? Why is this pattern, if you looked at 100 of these, why does 80 of them go to the downside? Well, because humans tend to just act the same way. There's something about it inbred within us that causes this to happen where we start to sell after that price action, okay? So just some key little tidbits there. Let's go to Tesla. Look at Tesla today. Big drop on Tesla. That's still NVIDIA. There we go. Look at this. So number one, where did Tesla top out? Double top, right? There's your pivot high. You have this huge pattern here, and it topped out right there. So that's first and foremost, technical resistance right there. Number two, look at the drop on Tesla today. It engulfed 1, 2, 3, 4 up days. So as a power, and if you look at the volume today, it was a huge volume today. But the key is that until proven otherwise, this is a short-term top in Tesla. Now, there are buying opportunities, right? So one of the things I like to do here is I like to say, okay, well, this is a gap fill here, so there's going to be a level here. Here's another gap fill. But remember, just because you have a gap fill, which is technical support, it doesn't necessarily mean I want to be a buyer there. I want at least 2 factors. Factors are everything, guys. One factor gets you slightly better than 50% odds. Okay, that's good. You win, let's say, a few times more. Out of every 100, maybe you win 53, 55 times. It's okay. But what I want to do is I want to get my win rate to 70%, 80%. And to do that, you need to find additional factors. So I want to show you guys something. So we're going to take those lines off. I'm going to do a Fibonacci retrace. Check this out, guys. If we take the low of this move and we do a fib and we bring it right up here, this is again, and I just want to show you. I'm going to put those lines back on. There we go. So if we take this low right here, which was the beginning of the bull move, and we go right to the high right there, that's why that line goes there, we look at our Fibonacci retraces. Well, what do we have? 382 Fibonacci aligns perfectly with this gap fill right there. For me, I say to myself, maybe this is a day tradable opportunity. Now, it's not a big enough pullback for me to go buy and hold, right, or buy and swing trade. But still, it's a good retrace. Next, I look at my next gap fill. It's right by the 618. Okay, now we're talking maybe a swing trade long. You get a big enough pullback into this level, maybe we get a multi-day, maybe even a multi-week bounce on it. So that's just some insights into how I choose levels. I look at multiple things. And by the way, I could sit down and break this chart down even more, probably find other technical trend lines that might even give me additional factors. But right there, coming up with two that align with those key gap fills, it makes me feel pretty good.
Bitcoin repeatedly fails to reclaim the $60,000 level as the Fear and Greed Index plummets to extreme fear. The Fear and Greed Index, a key Bitcoin sentiment indicator, has plunged to 25, marking its lowest point in 18 months. The last similar reading was during the market's recovery from the FTX exchange collapse. The market faces pressure from Megaxer payments and continuous BTC sales by the German state of Saxony. On Thursday, Saxony offloaded another $286 million worth of BTC, contributing to the market's instability. Despite a price surge to $59,516 due to lower-than-expected U.S. inflation data, Bitcoin could maintain the momentum to break through the $60,000 resistance level, partly due to ongoing selling pressure from Saxony. A bright spot is the steady inflow of funds into Bitcoin exchange-traded funds, ETF, with Thursday seeing nearly $79 million in fresh money, mostly attributed to BlackRock's IBIT. The continued selling by the German state and other market factors are key reasons why Bitcoin struggles to sustain higher levels despite positive macroeconomic indicators.
Gold, beautiful move today, guys. I'm glad I stopped out of my short on this for just a 0.74% loss, less than a percent, because again, the chart told me to do that, and that's so important here. So I had the confirming move, we waited for the retrace, and off to the races it goes. You now have what I would consider to be a bullish pattern, right? You have this move up, and then this is all sideways consolidation, and you got to assume that maybe it pulls back a little bit more here, but ultimately it's probably going higher, 2,500. If you go back to interviews that I did with like David Lynn or something at the start of the year, I was asked, what's your end of year price target? And by the way, at the time it was around $2,000, hadn't even broken out above the all-time highs on gold. And I said, 2,500, it's going there. People laughed at me. They always do. That's okay. It usually means I'm right. And sure enough, we've already gotten in the 2,400 level here. And again, this is a macro play, looking at the big picture that is now coming to fruition.
VanEck CEO Jan van Eck shares his optimistic views on Bitcoin and gold, highlighting their strong fundamentals and appeal amid market volatility. Van Eck discussed the Russell 2000's notable 3% gain, its best day since December. He highlighted the uncertainty of whether this surge marks a sustained trend or just a one-day reversal. He emphasized the significant role of government spending and low unemployment rates in preventing a recession and maintaining interest rates. Van Eck believes these factors pressure the Federal Reserve to adopt stimulative policies. Van Eck pointed out potential fiscal challenges, including possible tax policy changes post-elections, which could influence the Federal Reserve to ease monetary policy, benefiting small-cap stocks. Van Eck acknowledged Bitcoin's recent volatility, with spikes and drops typical for risk assets. He remains bullish on Bitcoin due to strong fundamentals like the halving event and anticipated Federal Reserve easing policies. Gold prices have reached record highs, driven by geopolitical tensions and central bank purchases. Van Eck noted a lack of significant inflows into U.S.-based gold ETF, with most buying from foreign central banks. Looking ahead, Van Eck anticipates 2025 fiscal challenges, particularly related to Social Security. He expects these issues to be addressed post-election, with continued Federal Reserve easing supporting both gold and Bitcoin. The ongoing fiscal and market dynamics underscore Van Eck's bullish stance on Bitcoin and gold as attractive investment alternatives amid economic uncertainty. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and and subscribe for more exciting content.